Good morning, Southern California, AM-1220 KHTS. This is the Santa Clarita Valley Chamber of Commerce Business Spotlight. I'm joined by Steve Schaefer. Steve Schaefer is a mortgage professional with American Family Funding and a specialist when it comes to reverse mortgage. Steve, welcome to the show.
Thank you, Fred. Happy to be here.
Yes, and reverse mortgages. We're going to talk about that for 10 minutes or so because I want to kind of understand more about it. What is a reverse mortgage?
Well, basically, a reverse mortgage is a way for people 62 and over to tap the equity in their home and continue to live in their home without making any monthly mortgage payments.
Yeah, in a nutshell, versus a forward mortgage, which is your typical mortgage, where you make a payment every month.
Right, and you got to worry about making that payment each month. A lot of times when people get into retirement, they're concerned about their monthly cash flow, and a reverse mortgage can be a good tool to secure your retirement.
Yeah, and now there's a lot of myths out there, so I'll throw some ideas out there. Who owns the house?
You continue to own the house. The lender does not own the house. You maintain title to it.
So you maintain title, and when you pass on, or you no longer occupy the house, it's still sold by the heirs.
That's right. That's correct. If you decide to move to another location or whatever, you can sell it, or your heirs can sell it, or if they like the property, they can just refinance it. But the point being that the mortgage is due in full whenever you leave the house.
Yeah, and you got 6 months.
There's an there's a 6-month period, and you can also get 2 extensions. So if it is left to your heirs, they've got basically a year to work with it.
So it's not like you're signing your house over to somebody else.
Not at all.
You're really, it's owned by the family. It's still a part of the estate. But one of the questions that comes up is, let's say you take out a loan for $300,000, and negative equity builds up because you're not making a payment, and at the end of the day, more is owed on the house than what it's worth. And we don't like those circumstances,
right.
But then is the family required to make up the difference?
No, they aren't. And that's one of the important protections. There are many protections that were put into effect with reverse mortgages. They're protected by FHA insurance. So the most that they could owe is the actual sales value of the house or the total amount of the loan due. The interesting thing is if you can never be upside down on it. If the value of the home goes down, unfortunately that's happened in the last couple of years, the family does not owe the difference. However, on the upside, if the value of the home goes up, the lender does not share in the appreciation. So if we go in the opposite how we've been the last year or so,
right,
it goes right to the estate and the heirs.
Yeah, and that's some of those misconceptions I really want to talk to you about. Tell me some of the ways people are choosing reverse mortgages.
Well, there's many different things you can do with a reverse mortgage. Some people are using it to supplement monthly payments. You can take it in a lump payment to pay off an existing mortgage. That's another thing. You don't need to own the home outright. You just really need to have a remaining balance on your current mortgage that could be completely covered by the reverse mortgage. A good example that I know of comes up with people that I talk to is they might have a couple that are 66 years old. They're thinking about retirement. They've now fully qualified for Social Security. There may be a small pension, but they still got $100,000 mortgage remaining on their $500,000 house. They're paying about $1,700 a month, and that's kind of the thing that's stopping them from actually retiring. They got another 5 years to go with that mortgage payment. They're fortunate enough to still have $200,000 in the bank, and they've got an option of maybe take $100,000 out of the bank, leaving a bank balance of $100,000 remaining, and use that $100,000 to pay off the mortgage. Or they could take a reverse mortgage and say on a $500,000 home, they'd have roughly $400,000 equity. Again, based upon their ages at 66, they could probably access about 64% of the available equity. Incidentally, the equity qualification for that goes up the older you get. But taking that, they could easily take $200,000 out, use $100,000 in the reverse in a lump sum to pay off the existing mortgage, use the other $100,000, put it in an equity line of credit, leaving their $200,000 bank account intact. So at the end of the day, they end up having no monthly mortgage payments. They're saving that $1,700 a month, plus they've maintained their $200,000 in the bank account, and they've opened an $100,000 equity line of credit for any emergencies that may happen.
Yeah, and let's talk about different scenarios. So that's one example where you have pay off of an existing mortgage, plus an equity line you can tap into
Sure.
at any time. Let's talk about some other scenarios. I've seen a situation where someone owed $300,000 on their mortgage and didn't want to make a mortgage payment anymore. Their payment was closer to $2,500, and they knew if they got rid of that mortgage, they can live very comfortably. And as a matter of fact, this client, Steve, decided to make partial payments. Well, they pay a little bit.
Sure.
Because you can pay extra on that mortgage if you choose to.
Sure. You can do that, absolutely.
What are some other ways in which you can use reverse mortgage?
You can use a reverse mortgage to actually even to downsize if you're thinking of going into, now you're hearing more about nowadays, reverse mortgage to purchase. If you've got a large home, your children are grown, and you want to kind of downsize a little bit, keep things on a single story instead of a big two-story home, you can downsize and you can sell your existing home, take the equity out of that, move into your smaller home, and say if you had 50% down payment to put down on your smaller home, take the remaining balance with a reverse mortgage and have no monthly mortgage payments.
Right.
You can also bank some of the cash if you want to, make a smaller down payment on your new, smaller home.
Now, Steve, let's talk about taxable. Is it taxable income? And does it affect Social Security?
In most cases, it is not taxable income simply because it's a loan. And since the proceeds are coming from a loan. Social Security, likewise, is not really affected.
Because it's a loan.
Because it's a loan. We do suggest that you talk to your tax advisor to be clear on that. If you do happen to be in a situation where you're receiving some you're participating in a government program that is needs-based, for example, like Medicaid or something like that, it might have an impact on your eligibility.
So you need to make sure you double-check that.
That's why you've got to talk to your tax person.
Your tax professional or somebody you know in the family to seek advice of an expert so you're completely informed. Now, is it safe?
It is absolutely, it's safe. There's many protections, and I think I had given the example of you really can't be upside down on it the way it's structured now. The important thing is, too, that the federal government stands behind reverse mortgages. They require HUD counseling, Housing and Urban Development counseling, for 1 hour before you can even proceed with a reverse mortgage. And the idea of that is that they want the consumer to know exactly what they're getting into and to actually, quite frankly, explore other options. The example I gave with someone paying off their house, that was one option, take the money out of the bank. The reverse mortgage was the other option. They kind of walk them through that. At the end of that, they will get a certificate, which will say that you have gone through the counseling, you understand the program. And so that's one very important protection. The other thing that I had mentioned as well, too, because of the FHA insurance, you cannot be upside down on your home, and any appreciation goes to your heirs.
Yeah, and that's what's important. There's a lot of protections put in place to protect the seniors, and that's really important. And I always tell people as a mortgage professional to make sure you just bring a family member along, bring a friend along, get another opinion by those that love, like, and trust you.
Sure.
And I think that's important. How does somebody start the process?
Well, first thing you would do is you could call us over at American Family Funding. You can call me directly. Be happy to sit down with you, kind of look over your situation, like the example I had just given, and see if something like that might work for you. And there's no fee for that consultation. After that, you would go and do your HUD counseling, and which takes typically 45 minutes to an hour. There is a cost for that, could range anywhere from $75 to $125. And after you've completed that, you've got your certificate. Bring the certificate back to American Family Funding Reverse Mortgage Group, and we can go and start the application process. Usually takes about 45 to 60 days, and the only other upfront fee, really, Fred, is the appraisal fee, which, depending upon how you're using them, could range anywhere from $450 to $700.50. So you're really looking at less than $1,000 upfront costs to start out with an American Family Funding Reverse Mortgage.
And the key is $75 to get a third-party opinion to explain everything to you through HUD, and I think that's important. How can those that want to reach you and get more information about the Reverse Mortgage Group at American Family Funding?
Yeah, pretty excited, too. I want to say that we're a reverse mortgage group because American Family Funding has been doing reverse mortgages for several years, but the word hasn't been out there, and we want you to know that we're live and local. You don't have to go and dial an 800 number or go to some remote website. Just come see us. You can reach reach me at area code 661-284-1150, extension 208. I'll give that once again. Steve Schaefer, area code 661-284-1150, extension 208. You can also send me an email, too, if you wish. Steve, S-T-E-V-E, at AFFLoans, LOANS.com.
AFF for American Family Funding.
Exactly, you got it.
Very good. And there's a lot of tech-savvy seniors out there that certainly would dial you up or give you a call. So, ladies and gentlemen, Steve Schaefer from American Family Funding Reverse Mortgage Group, and you've been listening to and watching online this feature of the Santa Clarita Valley Chamber of Commerce Business Spotlight on AM 1220 KHTS.